Let's look at some current events. In early October 2023, a new trend emerged on Wall Street. Investors began flooding into high-yield corporate bonds. What's driving this sudden shift? At first glance, it might seem like an economic decision based on changing interest rates, but dig deeper, and the answer lies in psychology. Let's explain. The big picture. America is in a unique position. After a string of rate hikes by the Federal Reserve and a historic debt default in early 2023, Americans were spooked. Stocks fell and confidence dropped. But now something interesting is happening. A new study by CNBC reveals that nearly half of Gen Z investors are turning to corporate bonds, a move seen as safer than stocks. As CNBC analysts point out, this may stem from Gen Z's experience. They entered the market during a time of low yields, high inflation, and limited growth. These factors are making them cautious. Now, why do these factors push Gen Z towards bonds? Because in times of uncertainty, people crave safety. Bonds offer a steady income stream and historically lower risk. It's an emotional response. No one wants to lose money, so people gravitate towards what seems secure. However, the challenge is that low yields also mean lower potential returns. For Gen Z, who likely have decades of investing ahead of them, this is a big deal. The key psychological concept here is opportunity cost. By choosing bonds over stocks, Gen Z might sacrifice long-term growth for short-term security. And this decision is driven not just by numbers, but by how they perceive risk and reward. Their entire financial worldview is shaped by the experiences they've had so far. But remember, the psychology of investing is universal. Whether you're a seasoned investor or just starting out, it applies to everyone. It's about recognizing our innate tendencies, our ingrained habits, and our emotionally charged relationships with money, because money isn't just currency. It's a reflection of our hopes, fears, and dreams. In 2023, we saw a perfect storm. The Fed's rate hikes made bonds more attractive, but this was combined with a lack of trust in traditional institutions following the debt ceiling drama and the longest government shutdown in US history. And let's not forget the wild ride of Silicon Valley Bank, the second largest bank failure since the 2008 financial crisis. It shook the very foundations of the banking industry, and as people panicked, pulling their money out without thinking twice, we witnessed a rare sight: FDIC lines longer than Black Friday sales. Why? Because fear. A single headline about a bank run can trigger a mass withdrawal. Even though logic says banks are insured, emotions drive crowds. So what should you do? How can you navigate the intricate dance between your emotions and your investments? Firstly, understand your feelings. Ask yourself, why am I investing? Is it for a comfortable retirement or to impress others? Being clear on your motivations helps eliminate external pressures. Secondly, accept that you can't predict the market. Accept that ups and downs are normal. Don't let short-term fluctuations dictate your long-term strategy. Thirdly, resist the urge to time the market. Research shows that it's almost impossible to consistently beat the market, so focus on a well-diversified portfolio and consistent investing. Fourthly, establish an emergency fund. Having 3 to 6 months of living expenses saved can prevent you from panicking and selling during market downturns. Fifth, educate yourself about cognitive biases. Understand how your mind works and the tricks it plays. Be aware of herd mentality, loss aversion, and other biases that cloud your judgment. Finally, keep it simple. Avoid complex investments unless you fully understand them. Stick to a diversified portfolio of low-cost index funds and monitor it regularly. By understanding your own psychology, you become your greatest ally in the market. You turn fear into opportunity, greed into growth, and uncertainty into stability. If you found this helpful, please leave a thumbs up and stay tuned for more such analyzes. And if you're ready to take your financial journey to the next level, consider checking out our platform. We offer personalized investment plans, expert guidance, and a seamless investing experience. With Public, you'll find everything you need to grow your wealth, backed by our team of experts, ready to begin. Visit our website to sign up and start building your brighter financial future today. Let's join hands and navigate the markets together. And here's an exciting update for those of you in the United States. Thanks to a new partnership, investing is now easier and more accessible than ever before. Now you can access Public from the comfort of your phone. All you need to do is download the app. Don't worry, your account will sync automatically so you don't have to re-enter any information. With the app, you'll enjoy the same great features you're used to on our platform. Plus, there are additional perks. Check it out. With Public, you'll gain insights from top industry analysts, trade ideas, and a vibrant community of investors. You can follow other investors, see what they're buying and selling, and even join groups to discuss investment strategies. The app is designed to make investing intuitive and fun. Want to learn as you invest? Watch educational videos, read insightful articles, or listen to engaging podcasts. Public brings Wall Street right to your fingertips. Invest in individual stocks, ETFs, and soon, fine art. And with Public, you won't pay commissions on stock trades. They've eliminated fees, so your money works harder for you. They've got everything you need to build your investment portfolio. And now, thanks to our partnership, you can sign up for a Public and start investing with zero commissions. Join the Public community and let's grow our wealth together. Click the link below to sign up today. At Wealth of Geeks, we believe that investing shouldn't be intimidating. It's a journey that everyone can embark on. Remember, every dollar you invest today is a step towards a more secure tomorrow. So whether you're a seasoned investor or just beginning, we're here to guide you every step of the way. Please subscribe, like, comment, and share this video with someone who might find it helpful. Your support means the world to us. Together, let's build a future where financial literacy and investing are not just accessible, but encouraged. Thank you for joining us on this enlightening journey. Until next time, happy investing.